My name is Maxwell Drever. Our company is called Drever Capital Management, and another company I have is called Crossbeam Concierge Investments. And our niche is providing housing for workforce families. We feel it's a impact, socially responsible investment arena that will be sorely needed because of increasing demand, shrinking supply, and it will be a very serious problem that we're addressing, and we're trying to do it in a major way. Tens of thousands of apartments. We have two funds. One's a Crossbeam Concierge Fund. It's Fund 2. Its focus is, again, providing apartments to families with workforce incomes, and it's across the whole United States, but they're always in growth markets. We primarily access the investments through our institutional lender relationships. We buy non-performing loans. We have a parallel fund with that. It has the same objective, and the objective is first and foremost, which is most important in the impact arena, is you have to supply financial returns, strong financial returns. And if you do that, then you can address the second and third metrics of triple bottom line returns, and that's the socially responsible plus the environmentally responsible aspect, sustainable investments. And that's the message that too many people in our arena, in the impact arena, get confused on, and investors are reticent to back them because they don't focus on that first bottom line. And the second and third bottom line improvements that we do, like we'll replace carpet, which is formaldehyde based, it's about the most toxic thing known to man, with faux plank flooring. The return on that, it's about 11x return. It's enormous. But most people don't think about, in my industry, in the workforce space of doing things like that. They're only at the high end. We're saying that's nonsense. It's responsible to do it at the affordable level also. And we have the metrics to show that it proves out. We did by the back door. It was unintentional. We've always been in the apartment arena, and I've always felt most comfortable not doing high-end apartments, but apartments where the residents, they needed to rent. We call it rent by necessity, and it was always a space that I felt comfortable in. And with my teammates, we've done 70,000 apartments, so we've done them all. Almost all of them have been reasonably, if not quite profitable. But the workforce component is the one, again, that has the shrinking supply, increasing demand, and I've always felt really comfortable in that arena. I like to go where other people don't. So maybe our buildings aren't on the covers of wealth magazines or whatever to say, are you proud of your trophy property? But ours are ones that really resonate with the residents as a place to live, and they stay there. I would say my children have made me a humanitarian. I have 7 children. And but I've always looked to doing well by doing good has been, I think, a mantra that I've had associated with me for decades. So I don't know anything different. Thank you for the question. And there's a couple different definitions for it. The one I think is most appropriate is it's a business. It's not a asset class. And we treat it as making not only an impact socially and environmentally, but also financially, so that you can make it in a sustainable way, 2 ways. One is that your properties are sustainable, but you can do it in a major way. And we're looking to make a major change. There's a book, Good to Great, and they say go for big, audacious, set yourself up for a big, audacious, I can't pronounce it, audacious goal, and that's what we've done. And that's why in the RTC cycle, we were one of the largest investors. We bought 18,000 units. We turned those around. We made really significant profits for our investors, and we're doing the same thing right now. And that's a real impact where you do it in a big way. It isn't just smallsies. And one of the things I'm most proud of is that we'll go into a neighborhood that's challenged, and say there's 20 apartment communities in there. We'll buy 5 of them, and we'll fix those up. That sets the precedent for our peers to go in and buy the others. And we've transformed entire neighborhoods. We have letters from mayors that have acknowledged that that's one of the most responsible things you can do. It's a true measure of your worth to society. Now we're doing it pretty much all over the country. We actually go where lenders have problem assets. We won't go into some areas if it's a declining neighborhood and it can't be changed, we will not go there. But if it's an area that can be changed, we're there front and center, and we're not hesitant to go to say yes to our lenders because we want them to call us the next day with another property or another non-performing loan. And we primarily buy non-performing loans, and that's one of the ways that you can get stronger returns. That first bottom line of the triple bottom line for your investors, you can buy loans often at a significant discount, and by having a low cost basis, you're pretty safe. And again, we've done. My team has done upwards of 70,000 units, and there's been very few failures. Is to say, use our example, whatever your widget is, and take it and go for it in a major way. And do it, though, financially first, because that's what's going to resonate with people. People have been so hurt in the last, in this recession, that they're pretty darn gun shy. So you have to show them not only is it safe, but it'll give them a reasonable return. And our investments, fortunately, have historically done better than 12% returns, which is pretty amazing. We'd be glad to supply. We have stills, and we would be, if you'd like to do a video, we'd be glad to take you and show you some before and afters that really tells our story. We bought this high-rise in Evanston. It was only 2 years old. It wasn't insulated. Hard to believe. Something off Lake Michigan, and not only that, it was gray. Everything. The carpet was gray. My wife thought the carpet was the pad. She didn't realize that it was the carpet. So we replaced it with really colorful, strong, bold carpets, and we took it from 60% occupancy and we filled it up. And this is in an urban renewal area, and it really supplies it's right next to a train station. It's workforce housing. It's a perfect niche, and we've taken it from a totally energy inefficient property where when people were moving in before, they'd give them 1 space heater if they had an interior unit, to 2 space heaters if they had a corner unit, to now an energy efficient building. Really? I've been doing it since 1967. I can't count that high. But we've been doing it on a counter-cyclical basis, and we'll only go in and buy when we think the pricing is right. This is probably one of the most opportune times because there's many loans were written in 2007 and 8, and they were based on really full boat projections that didn't come to pass, and the properties will not support those kinds of loans, and that's what we're trying to do. We like to buy non-performing loans. That's our first shot there. I'm at least in our arena, because, and it's again, we were doing it before it was called impact investing. We were doing it back in the 80s, and where other people would follow us and go into these, after we started fixing up buildings in bad areas, to transform those areas. And they have terms like gentrification, but that we weren't that, because we were more in the suburban markets, and but we were able to transform, again, entire neighborhoods. Like in the RTC cycle, which was one of the toughest times in real estate, when the government took over the savings and loans that failed, we bought 18,000 apartments, and the turnover was over 100% per year in the buildings that we bought. And we went in and we not only fixed up the properties, made them attractive and a nice place to live for families. I mean, they were clean. The street scene was quite attractive. And there's a term that came out called Dreverizing way back when, about it was transformational in how you can fix up apartments and do it right and on a cost-effective basis. And we also instituted, after-school tutoring programs, free for kids, to social parties for Hispanics, for Indians, whatever nationality was whatever the predominant nationalities are, and for families. And by building community, people don't leave. So our turnover plummeted down to, I think it was about 54%, and that was 17 points better than the market. That's not 17%, that's 17 points. That's huge. And so people, they like a safe, comfortable place to live that's home, and they stay. That's a great question. The reason is that they had this term about socially responsible investing, and our primary investors are the life insurance companies and that, and not only they, but others that invest in these programs, they ended up being often financial debacles, and because they didn't first focus on that first bottom line. So when you've had a bad experience and you're a big institution, a lot of bad experience, and you lost hundreds of millions of dollars, it's the last thing you want to take to your board of directors is saying we're going to do, a dozen new socially responsible investments. And the tide will turn, and it'll go back to that. But right now, not only the institutional side, but also high net worth families who've had almost everybody's been impacted by this recession, that it's they want to have their capital safe, number one, and then they want a stronger return. And right now, they don't, if you can say, well, holy cow, we can get you better than 0.5% return, which is what they're getting on their money, often at in liquid instruments, it's quite an appealing thing. So we are getting traction, and we are seeking to bring in the families, because in our parallel fund, and we take investments minimum $1 million, and it's a niche that is starting to really resonate, because you can get 7, 8 or better % cash flow. I mean, that's huge. It's a necessity of life. People have to have affordable housing. They have to live somewhere, shelter, and that's what we supply. I'm proud to be in this arena, and I'm appreciative of your taking the time with me. Thank you.